Quotes from the top hedge fund managers. There are two main drivers of asset class returns: inflation and growth. Ray Dalio. Treat your life like a game. Ray Dalio. I think so many people are reactive. They see things in a short-term way that they are right up against it. Ray Dalio. The key is to wait. Sometimes the hardest thing to do is to do nothing. David Tepper. There is a time to make money and a time not to lose money. David Tepper. I am the animal at the head of the pack. I either get eaten or I get the good grass. David Tepper. Capital markets reward you for what you learn that other people have yet to ascertain. Ken Griffin. My advice to every student who is trying to make a decision for the years immediately after graduation: whatever you want to do, this is the time to pursue it. 20 years from now, your freedom to take risks will be limited. Ken Griffin. Risk is what you make of it. Ken Griffin. One of the best rules anybody can learn about investing is to do nothing, absolutely nothing. Unless there is something to do, I just wait until there is money lying on the corner, and all I have to do is to go over there and pick it up. Jim Rogers. If everyone thinks one way, it is likely to be wrong. If you can figure out that it is wrong, you are likely to make a lot of money. Jim Rogers. The way to get rich is to put your eggs in one basket. But watch that basket very carefully and make sure you have the right to basket. Jim Rogers. The way to build superior long-term returns is through preservation of capital and home runs. When you have tremendous conviction on a trade, you have to go for the jugular. Stanley Druckenmiller. The way to build superior long-term returns is through preservation of capital and home runs. Stanley Druckenmiller. I focus on my analysis on seeking to identify the factors that are strongly correlated to a stock's price movement as opposed to looking at all the fundamentals. Stanley Druckenmiller. I've seen a lot more go to zero than infinity. Jim Chanos. I call it the rule of 3. If you need a company's financial statements 3 times, and you still can't figure out how they make their money, that's usually for a reason. Jim Chanos. I've learned there's a big difference between a long-focused value investor and a good short seller. That difference is psychological, and I think it falls into the room of behavioral finance. Jim Chanos. The way I understand the rules on trading on inside information, it is very vague. Stephen Cohen. I always tell my traders that they would have loved the 1990s because he was a fairly easy time to make money. Stephen Cohen. I'm not reclusive. I am out and about. Stephen Cohen. As an investor, my job is to figure out what will happen rather than what should happen. David Einhorn. The loss was not bad luck, it was bad analysis. David Einhorn. You have a certain set of facts, and you are looking for situations where you have an edge, whether the edge is psychological or statistical. David Einhorn. The only thing I do know is that from chaos comes opportunity. Daniel Loeb. Timing is everything. David Loeb. In order to be a really good investor, you need to be a little bit of a philosopher as well. Daniel Loeb. You have to have a strategy and a position, and stay true to that strategy, and not pay attention to noise that could surround in a particular investment. John Paulson. The most important thing in investment is to know what you are investing in, and if you are confident in the outcome, it is important to stay true to your position. John Paulson. I still think buying a home is the best investment any individual can make. John Paulson.
Love trading riddles? Subscribe for more.